Thank you for joining us today. I am Casey Lee, Government Affairs Director for the Rivers Association of REALTORS. And with me today is Brian Johnson, one of our members, longtime member, and somebody with commercial and residential experience who has some experience with the taxation process, both assessment, rate setting, protesting.
Yeah, certainly. I mean, I've done a little bit of all of those. Not so much on the, I've been involved in commentary on the rate setting side, but haven't really done as much lobbying or whatever you want to call it that.
No lobbying. That's my job. Brian, we've got some frequently asked questions. And if you don't mind, we're going to take some time today and just answer a few of those frequently asked questions that may have some misconceptions about them or just straight up confusion.
Absolutely. Let's do it.
I've been getting a lot of calls from realtor members, members of the public, even some elected officials, and we're seeing some sticker shock on some values. Why may those assessed values be incorrect?
Well, simply because it's mass appraisals. That appraisal district is charged with making a daunting task, and that's assigning what they believe is the assessed value to thousands and thousands and thousands of properties.
And they're required by the state comptroller to get that number right.
Correct, but with understanding that it's impossible to actually go do a full appraisal on all these properties. So they do mass appraisals, and certainly with the market climate that we're in, with increased values of properties, it creates a potential for a large margin of error. And so that's one of the reasons fundamentally that you need to be paying attention, is because when you have such an increase year over year on sales price, if they don't have the adequate comps, they're going to be making significant adjustments, and those adjustments are intended to reflect market value, but sometimes they don't. Sometimes they just, there's the human element there, human error, or machine error at that matter on mass appraisals, but that can really influence a property's assessed value, and it could be very off, but it also could be on. So.
It could be spot on.
Yeah, exactly.
So it's important to look at your value when you get it. Take a notice of what's going on. Maybe consult a professional, be it a realtor, tax advisor, an appraiser. Get some information and potentially go protest.
Mm-hmm.
But whether you protest or not, we absolutely need to be paying attention to the rate setting process, and we can find more information about that at knowyourtaxes.org.
Absolutely. We may be pleasantly surprised by the proposed rates, but but we don't want to find out when we get our tax bill.
Maybe, but we need to be involved in that process.
Absolutely. Yeah, we don't want to find out when we get our tax bill and it's too late. Now's the time to get involved and look at and be involved in that process, because it's our own taxes. We get to decide it. So yeah.
Brian, thank you for your time.
Thank you. Thanks, Casey.